Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is the Kickstart video for November 27, 2024. In the Kickstart video, I take a look at some of the major currency pairs from a technical perspective. So let's get started. We are seeing the U.S. dollar move lower in trading here today. Starting to take a look at the euro versus U.S. dollar. And what we're seeing is the pair move higher after the data drop this morning. I saw GDP come in as expected, but some of the inflation data was a little bit lower than expected. Initial jobs claims came in fairly strong, but the continuing claims were the highest level since November. That may have helped to push yields lower. We're seeing the 10-year down around 5 basis points in trading here currently at the moment, and we're seeing the dollar move higher, the euro moving higher, the dollar moving lower. We also, today, fundamentally, ECB's Schnabel spoke a little bit more hawkishly, and that helped to push the euro versus US dollar higher in the European session, taking the price away from the 100-hour moving average. Broke above the 200-hour moving average, but stayed below the high price that we saw from yesterday's trade. That was high for the week. Rotated above and below the 200-hour moving average, but ultimately based against this level before moving higher in the early U.S. session. We are now looking to approach the 38.2% retracement. That's of the November trading range from our high price that we saw beginning in November here, a few days into the start of November, to the low price that we saw just last Friday's trade. So getting above that 38.2% retracement at 1.05628 is a key barometer. As most people know, I like to see trend moves get above the 38.2% retracement. If you can't get above the 38.2% retracement, then this is just a plain vanilla variety, and we expect a rotation back down, back below the 200-hour moving average, back below the 100-hour moving average. As it is right now, we'll give the benefit of the doubt to the buyers to see if they can continue this momentum through the 38.2% retracement. If they can't, then a break back below the 200-hour moving average would be a disappointment and lead to likely a rotation back down toward maybe even the 100-hour moving average down here at 1.04776. Let's next take a look at the dollar versus yen, and this currency pair is also moving to the downside, with dollar moving lower. But actually with a little bit more momentum than the euro versus US dollar. What helped the downside momentum was a break below this swing area through here. The swing area was home to a number of different lows here, forming this floor each time the market found this level, at least right through here. We did see a bounce in trading. Yesterday, the price did fall below that level, but then rotated back to the upside. But by the close, the price had moved below that level in trading here today. What did the high price do? Stalled against the low of the level at 153.26 and started its rotation to the downside, getting below the 200 bar moving average on the 4-hour chart. Increase the bearish bias, and then getting below the 200-day moving average. That was the first break below the 200-day moving average, going back to early November right through here. That increased the bearish bias as well. But the November low right here seemed to have stalled the fall, though we did make a new low for November, and going back to October right through here. On the break here, we only fell below the low from earlier this month by about 4 pips before rotating back to the upside. But as you can see, we're rotating back down toward that 151.27 low from early November. Break below that level and stay below that level opens the door for further selling, with the 38.2% retracement as the next key target on the downside. Maybe even this high right here. So this area between 150.18 and 150.33 would be the next key target. That's a big jump from the 151.27, but the dollar versus yen is moving in big chunks these days. So be aware of that. If I go to the 4-hour chart, you can see what the retracement is. This currency pair has been trending to the upside since really September. Higher, and so the 38.2% retracement comes in at 150.182. Be aware of that level on the downside on further selling pressure in this currency pair. Let's take a look at the sterling versus US dollar next, and we'll focus on the hourly chart again. And like the euro versus US dollar, we're seeing the price first get above the 100-hour moving average after staying below it during most of the Asia session. The price moved back up toward this swing area. This swing area has been home to a number of different swing lows and highs, including the high prices from Monday trade and Tuesday's trade right here near the 1.2613 level. That those high prices were joined by the 200-hour moving average in trading here today. So ceiling here at the 13 level, including the 200-hour moving average break above that ceiling level, and the 200-hour moving average increases bullish bias, and we're seeing increased momentum to the upside. The next target comes near the 60 level, which was these highs right through here. Get above that level at 2660, opens the door for a rotation toward the 38.2% retracement. That's of this move down from the November high to the November low. So the November trading range, that level comes coincidentally at 1.26991, right near the 1.2700 natural resistance level. A break above that level would have traders targeting the high price right through here, which came in at 127.15, and then the falling 100 bar moving average on the 4-hour chart at 1.27319. But first things first, we need to get above the 126.60 level. If we get above that level, opens the door for further upside. Well, what you don't want to see for traders looking for more upside is a move back below the 200-hour moving average at 1.26128. That would be a disappointment for the buyers on the break. A final currency pair I'll take a look at is the dollar versus Swiss franc. Like the other currency pairs, this currency pair is moving lower, with the US dollar moving lower. The price action has taken the price to a swing area here between 0.8816 and 0.8826. Also testing the 100 bar moving average on the 4-hour chart. That's this blue line in the chart. We also have the 38.2% retracement of the November trading range. We did move below that level, which is good news, but we're trading above and below it in trading, but back below it, as you can see. Also in play, finally, is a 200-day moving average. That's this green line right here, which is going sideways through here. So lots of stuff going on in this area. For the dollar versus Swiss franc, with the 38.2% retracement, the 200 bar moving average on the 4-hour chart, or 100 bar moving average on the 4-hour chart, 200-day moving average, and swing area all coming in between this area. Break below it, it increases the bearish bias for the dollar versus Swiss. We should see lower levels on a break. And with the reestablishment of resistance at 1.8826 as close resistance now for this currency pair. So there you have it. A look at some of the major currency pairs that kickstart your day. Dollar moving lower. We'll see if that momentum can continue during trading today. My name is Greg Michalowski. Good fortune to trading. Bye-bye now.